All right, so in this video, I'm going to talk about some of the basics associated with buy-sell agreements. So the basic idea behind a buy-sell agreement is that if a triggering event occurs, the ownership interest in a business is sold to the specified buyer. So that hence the buy, the sell. So one person is going to buy, one person is going to sell, and it's specified if this triggering event occurs. So if that triggering event is the death of the person with an ownership interest, then life insurance could actually be used to pay for that sale. Now, if you think about that, we don't actually know when somebody's going to die. So typically, what would make sense for that would be a whole life insurance kind of a policy. So the idea there would be uh, a situation in which, let's say, a person owns a business. They want to sell the business to a child, their adult child upon death. And so with the buy-sell agreement, they put in place an agreement in which at the owner's death, the adult child will purchase the business. And so what could be done at that point would be put a life insurance policy in place that pays out to the adult child, but is based upon the life of the owner, the parent. And then when the parent passes away, the adult child receives a payout, which can then be used to purchase the business from the deceased parent's estate. That's kind of the idea. Now, if you're looking at some of these kinds of transfers, there are certain kinds of transfers can trigger transfer for value rules, which can then have tax implications and things like that. But there are some exceptions to transfer for value rules that can make buy-sell agreements easier to do. So for buy-sell agreements, it may not trigger some of those transfer for value rules quite as much. Now, we're going to talk about in subsequent videos, or I'll address in subsequent videos, a couple different types of buy-sell agreements. So we can have entity agreements, which are generally done by a business. So a business would pay for the entity agreement. There can also be cross-purchase agreements, and that would be involved typically a number of owners in purchasing policies on other partial owners in the business. And then there can also be wait and see buy-sell agreements, which can have a whole process for multiple entities or individuals having a chance to possibly buy depending upon a chain of events. So it gets a little bit interesting with kind of how that plays out. But in any case, hopefully this video gives you a little overview of sort of what the idea behind a buy-sell agreement would be and how life insurance could possibly be helpful with it. And in subsequent videos, I will talk about that more. Hopefully this helps. Thanks for watching and have a great day.